Hey traders, welcome back to the weekly Forex Forecast. Next week is a big week because we've got three major interest rate decisions out of the US, Europe and Japan. And in today's video, I'm going to talk you through my trading plan for next week and how I'm looking to trade these major news events coming up next week. Quick look at the economic calendar shows us the first of these interest rate decisions taking place on Wednesday. We've got some CPI data out of Australia, which is also likely to affect the Aussie pairs and bring some volatility. But it's this interest rate decision that is the headline event for next week. It's FOMC out of the US, and the Federal Reserve are expected to raise rates. And keep an eye out for hawkish rhetoric to accompany this with potentially discussions about more interest rates to come after this meeting. That is the potential unexpected catalyst to boost the dollar heading into next week. However, we are going to be looking at playing the US dollar in a reactive way. In other words, wait for the interest rate decision to come out and then look for different scenarios where you can take advantage of that. That's what we're going to be doing in today's video. And we also have on Thursday an interest rate decision out of Europe. And then on Friday, we have the BOJ. And of course, the big question is, are they going to recommit to their yield curve control program, which is bearish for the yen, or are they going to adjust it, which of course is bullish for the Japanese yen if they do that. Okay, so let's have a look at the scores for the coming week. And the first thing to note is the scorecards are based on probability models. It takes the data and it produces rolling probabilities 1 month out to show us what markets are most likely to over or underperform in that time. What they do not do is predict the outcome of interest rate decisions or central bank press conferences. So the first thing to note going into next week is it's very, very important. Yes, we'll once again, as always, be using the scorecards as a guide, but we have to take into account the upcoming news events because they can change the scores when new data comes in. And at the same time, those upcoming interest rate decisions are likely to cause both a contraction of volatility beforehand and then an expansion of volatility afterwards. So my favorite pairs heading into this week are as follows. The Swiss franc to the long side is the #1 theme yet again this week, and Swiss franc long plays last week were highlighted as one of the best things to look for, and they did. If you were involved in those, they paid very nicely, especially Aussie franc to the downside, New Zealand franc to the downside. They were really nice moves last week. So Swiss franc long plays is my #1 theme once again, and to the upside as well, I also like the euro. Now we have an interest rate decision on Thursday and FOMC on Wednesday, which will affect it, but that's pretty much going to affect most of the markets next week. So in terms of the euro, what I like about this is we do have positive momentum compared to the pound, which is slightly stronger, but we have negative momentum. You can see this. So I'd rather look for euro longs next week, and euro and Swiss franc longs versus first and foremost the New Zealand dollar, because we don't have an interest rate decision out of New Zealand, and also the Australian dollar. We do have CPI, so it is a big week. There's a lot going on, but Aussie shorts versus the euro and the Swiss franc. So Aussie franc to the downside, euro Aussie to the upside. New Zealand Swiss franc to the downside and euro New Zealand to the upside I do really like. And on top of that, I also like the US dollar. However, we're going to be looking at playing the US dollar in a reactionary way based on the outcome of FOMC. So I am going to be looking at US dollar Swiss franc to the downside, euro dollar to the upside if we get dollar weakness from FOMC, which is what my preferred outcome would be because we're already looking here to be on the short side of it. But if we get US dollar strength, then what I would like to do is, if I'm going to be looking at playing that, I'd like to play that against some of the weaker currencies. So the New Zealand dollar first and foremost, in other words, New Zealand dollar to the downside, and also Aussie dollar to the downside. Those would be the two I'd be looking at. And the final play next week is the Japanese yen. We have the BOJ on Friday, but I would like to see if I could get involved in franc yen to the upside or euro yen to the upside throughout the week, and then be out of that move by Friday, because if I'm short the yen and come Friday the BOJ adjust their yield curve control program, it's going to cause a sharp rally in the yen, and I don't want to be on the wrong side of that. So I like yen shorts, especially versus the franc and the euro, but want to be out of those before the BOJ meets on Friday. Okay, so let's have a brief look at the individual currencies before we move on to the markets this week, starting with the US dollar. And the US dollar is really the key going into next week with FOMC. The dollar is right at an area where it could technically go either way. And if you look at this, what we've got in the dollar here is we do have a very, very choppy corrective move. We tested the lows over here and we kind of failed. We tested and we broke through the lows again and we kind of came back and we've closed above them. So we're really lacking momentum at these lows. And very often you do see that before a reversal. And if we look at this also technically, you can see that the US dollar has actually been in a range since 2015 over here. And what we saw last year, this rally breaking out finally after 8 years. The prior high over here, this is where it failed multiple times and it caused the range to hold. And we broke out of this high last year. And now going into FOMC next week, we sit right at the 2015 high breakout. So the breakout of this major range. If this fails, this is where we could see a much bigger sell-off in the dollar. But at the same time, you can see it's absolutely primed also to bounce because we have the breakout, we have the retest, and that is generally where you start to see these markets or these trends continuing. After they break out of major ranges, they come back and test broken resistance as support, and then you get the continuation to the upside. So really, it's within the power of the Federal Reserve to, decide the next move in the dollar. And that's why going into next week on a short-term basis, I would rather be reactive. And we're going to be looking at a number of these dollar pairs we can play both ways, depending on the outcome of FOMC. But very important to note the bigger picture here, that we are sitting now right at an area you would expect normally a bounce and a continuation of the trend in the dollar. Next is the euro. Now the euro really is just the inverse of what we looked at in the dollar. You can see here is the major breakout in the euro. We failed once, we came back, we've broken through with momentum, and now we're sitting right at this area. So again, it begs the question, do we come back and fail down below this area? And this just becomes almost like an ending diagonal, but usually you get one more. We could even get one more like this before we fail. And that would be the major reversal in the euro, and that would, coincide with what we discussed in the dollar. I do think it's easier to see this technical setup in the dollar than it is the euro because, of course, euro, again, this is just the inverse of what we looked at in the dollar, essentially. Next is the pound. Now, the pound, you can see, has been one of the best long plays all year in the scorecards, and it's really kept us on the right side of this move, and it's paid nicely throughout the year. And the pound, after this flash crash down here, you can see we had this kind of capitulation bottom, and we started to pull back. This was the major breakout over here. We broke, we tested, but you can see there's a slight issue here in the pound. We are actually lacking momentum, and every time we push higher, we actually lack momentum. So it is interesting, and again, FOMC will likely decide this. If we get a big rally in the dollar next week based on what happens in FOMC, they raise rates, then maybe they talk about, they come out more hawkish, talk about raising rates again. This could spell the end of these moves. However, relatively, I do actually still like the pound to the upside, but FOMC is going to be a big pivot point in markets, I would imagine, next week. Next is the Swiss franc. The Swiss franc already came up and tested the 1.117, which was the yearly target that I had here at the beginning of the year. I highlighted this. Going into next week, we've started to pull back a little bit, but any pullback in this area, look at the momentum through the previous high here. In fact, momentum seems to be increasing, unlike what we just looked at in the pound, for example. So any pullback in this market is viewed as an opportunity to look for longs, and it's still my favorite market going into next week, that Swiss franc to the long side. Next is the yen, another market which is right at an area where it could go both ways. And very often you see this, it's not really a coincidence. You see before major events, especially press conferences, interest rate decisions, these markets get themselves into position where they can go either way. And with the Japanese yen, this is very clear because we have a breakdown with a lower high. And so therefore we've started a new trend to the downside. We've actually pulled back and retested this. And just as in the US dollar, I was discussing how we broke and we tested it, and that sets the stage for the next rally. So too, breaking through here and testing the underside sets the stage for the next leg down. However, because this is right at the point where a new trend to the downside can start, it is also the point at which a new uptrend can start if that fails. Very, very much like the dollar, if it fails here. So it's interesting because, again, the power of the next move here is likely to be decided by the BOJ on Friday. It's not something we can look at technicals or even scorecards because, if the BOJ comes out and say it scrapped yield curve control, which it's not going to do in my opinion, it would adjust it first. But say it did that, this is not a move you can predict just by looking at technicals or even rolling probabilities. So it is in a position where it can go both ways. I do like Japanese yen shorts, but I would be out of this just in case this kick starts the next leg up if the BOJ comes out on Friday and adjusts its yield curve control program. So I'd be out of yen short before Friday just to be on the safe side. Next is the CAD. I still really like the CAD for new lows to the downside, and you can see we've tested this with a kind of A, B, and a C, and we've had this really weak close, and last week was just an inside week. So I am looking for this to fail in the near term. Maybe it's from FOMC next week, you know, if we get a strong dollar and we start to see the commodity currencies underperforming. I would rather be on the short side of this than the long side, but I think there are better shorts next week. And the final two markets here, the Aussie dollar and New Zealand dollar, you can see, again, just like the Canadian dollar, I've been discussing new lows in these markets all year, but we've been stuck in a very, very, very tight range as we've seen disinflation, and we came back and tested the high, and we've tested the high again. So we are now at an area where technically this can sell off, but again, this is likely to be determined by what the Federal Reserve do. You know, do we get a stronger dollar and a bit more risk off coming into the markets? Or, you know, do we actually see the Federal Reserve come out, disappoint to the downside, you know, disappoint the hawks, and therefore we actually get a bit of a relief rally in some of the commodity currencies as well. Now, I know they're not part of the dollar index, but they do have that risk on, risk off dynamics opposite to the dollar as well. And finally, the New Zealand dollar, which is my favorite short. And if we get US dollar strength off of FOMC, it is the New Zealand dollar and the Aussie dollar that I would like to short to the downside. You can see this is also stuck in a range, and we're sitting right at the top. In fact, we've sold off from the top of the range. So my anticipation would be for a break of this low, and this would kickstart the next move down to the lows, which we've been looking at pretty much all year, although we got tied up in this range. And that is the opportunity, not just in Aussie dollar, but New Zealand dollar, I would be looking for if we get a stronger US dollar post FOMC next week. Okay, so let's have a look at the markets themselves, starting with crude oil. Now, last week I was bullish on balance in crude oil. And again, I am bullish on balance. So I'm really only looking for long opportunities. But I don't think crude oil, I mean, we cover crude oil every week. I don't think crude oil is the best opportunity as it currently stands. I think there are better opportunities here highlighted in gold that we're going to talk about. Even the interest rate decision opportunities, I think, are better than crude oil because they're going to bring volatility and they should give some opportunities after the events themselves. You can also see crude oil pretty much didn't go anywhere last week. It just kind of chopped around. It didn't take out its upper or lower area at all. So coming into this week, any pullback in this market is still viewed as a potential opportunity to look for longs and breakouts to the upside into the 80 area. Or if we come all the way down to the 73 area, this is where you could start to look for a short-term trade and a bounce to the upside in crude oil. Okay, so the first pair we're going to look at is New Zealand franc, and New Zealand franc to the downside is my favorite market going into next week. We did trade through the lower bound here highlighted in last week's video. This was a fantastic short to the downside if you were looking at this or involved in this. And you can see we actually had such a strong move. We breached this and we pulled back, tested it, and we started to sell off even more. Just bear in mind, with so many interest rate decisions this week, there's likely to be a lot of volatility. Don't be surprised to see some of these bounds breached like this with New Zealand franc, because that does happen with heightened volatility around these kind of news events. So a great opportunity from last week's video in New Zealand franc. So coming into this week, I can either be short New Zealand franc or do nothing. Buying this market is not an option for me next week. So any pullback in this area is viewed as an opportunity to look for bearish breakouts intra-week down to the 0.5270 area. Or if we pull all the way back and we retest these highs over here, if we pull back into this area, the 54,100 or the 0.54100, this is an opportunity to start to look for a near-term short in New Zealand franc from this area as well. Next is Aussie franc, another market that came right into, in this case, the lower bound highlighted in last week's video. So another really good opportunity from last week's video if you're involved in this to the downside. Coming into this week, I can either be short Aussie franc or do nothing. So any pullback in this market is viewed as an opportunity to look for an intra-week breakout to the downside into the 0.5740. Or if we pull back and we start to maybe even come slightly through here and retest this high, the 0.59100 is an area you can start to look for a near-term short opportunity in Aussie franc, as well as, generally speaking, you should get a bounce from these areas once you trade into them. And the final franc pair here I like is franc yen. Not highlighted in gold because we do have the interest rate decision, same with the euro, and we've also got a euro one. But I do like the yen pairs as opportunities to look at next week. We've got really nice momentum here, so any pullback in this market is viewed as a potential bull flag and I'm going to be looking for an intra-week breakout into the 166,250 area, or as always, if we pull all the way back and we test this low into the 161.250, this is the second place next week you could look for a near-term bounce in franc yen. Moving on to the euro pairs now. The tricky thing here is we do have FOMC on Wednesday and the interest rate decision on Thursday. So ideally, I would like to be involved maybe in euro pairs before FOMC. Otherwise, you may need to look for these after FOMC and after Thursday, because generally speaking, you're going to see these pairs affected by FOMC as well. So any pullback in this market is viewed as an opportunity to start to look for bullish reversals up to the 1.8250 area. Or if we pull back, and I like these lows over here, you've got 1, 2. If we pull back and test these lows into the 1.780, this is an area you can also look for a bounce in Euro New Zealand next week. Next is EurAusd. Now I can either be long or do nothing EurAusd next week. Selling this market is not an option for me. So what I'd like to see is a pullback towards the 1.630 area, and any pullback would be viewed as the opportunity to look for a reversal into the 1.6750 area. And of course, if we don't break out, say we just trend down and we correct all the way into the 1.630, this is the second area you can look for a near-term bounce in EurAusd. And the final pair here before we move on to the US interest rate decision setups is Euro Yen. Another market you can see really nice momentum here, and I do think we've got more upside. So definitely something I'm interested in, Monday, Tuesday, even Wednesday before the interest rate decision out of Europe on Thursday or the BOJ on Friday. Any pullback in this market, I'm going to be looking for a potential breakout to the upside into the 160 area. And of course, if we pull all the way back and we test this low over here, this would be the opportunity to start to look for a potential bounce in Euro Yen. Just bear in mind, if we do pull all the way back and we're in this area come Thursday or Friday, if you get involved in that opportunity, you are going to be taking on interest rate decision risk. So there's nothing wrong with sitting out some of these trades if they don't set up, until we get to those interest rate decisions, because you will be taking on the volatility risk of those interest rate decisions if you're involved in these markets through the interest rate decision itself. So just something to bear in mind. Some of you may want to take that risk, others may not. So something for you guys to decide in your own personal preference. Okay, so wrapping up the Forex complex with the US dollar pairs, and the first two here, US dollar franc and euro dollar, are based on dollar weakness off of FOMC. Now, I much prefer US dollar Swiss franc because don't forget the euro, there is an interest rate decision coming up on Thursday as well. So euro dollar next week is likely to be, pretty difficult market to trade. But US dollar Swiss franc, any continued pullback in this area, I'm going to be looking coming into Wednesday, a sell-off to the downside, which would be dollar weakness from FOMC. And then any pullback is going to be the opportunity to look for a follow through down to the prior lows here at the 0.8550. Now, the second thing I'll be looking for is if we just consolidate and we go nowhere and we get a spike to the upside, the 0.8750, this would be a second area you could look to potentially fade the interest rate decision, but you don't want to be fading the interest rate decision if you've got a very bullish catalyst for the dollar, right? In that case, you'd be better off looking at these markets down here. But if it comes out as expected and, there isn't really too much fanfare and it just doesn't seem like, a spike to the upside, in the US dollar is really warranted based on what's happened, then you could step in and, wait for the following day at least to let things settle down before you fade interest rate decisions. You could then step in the following day and look for this to come down as well. The next dollar week setup is euro dollar, but just bear in mind that we have the interest rate decision also from the ECB on Thursday, so this may be a difficult one to trade. You can see last week we pulled back right into the lower area where you could look for a bounce in this market. So it may actually be the trade in euro dollar is a pre-FOMC trade, Monday, Tuesday and Wednesday, based on anybody who was involved maybe to the upside, you get a short-term bounce heading into next week. Any pullback in this area, and then maybe Wednesday or Thursday, we see the breakout to the upside, that would be the opportunity for a follow through into the 1.1250 area. Or conversely, if we sell off all the way down to the 1.1, this would be also an area you could look for a near-term bounce. But just bear in mind, you may have to wait until after ECB on Thursday and then, hold this over the weekend into a new week to get any kind of distance on the trade. So I do think this is one of the more difficult ones to trade next week based on the events coming up. But certainly US dollar Swiss franc to the downside would be a good one on dollar weakness from FOMC. And the final two markets are New Zealand dollar, Aussie dollar, and both of these will be based on dollar strength. So if we get more hawkish than expected FOMC and we see a rally in the dollar, what I'd like to see then is, what we'd be looking at here is one of two things. Either we get the breakout intra-week from FOMC, and then any pullback is the opportunity to look for shorts into the 0.6070. Or if we just consolidate and then we push higher, but we see that, you know what, there isn't really any reason for this. This is just kind of a bit of volatility based off of the interest rate decision. This would be the opportunity to start to fade this to the downside. Sometimes you can have, because this may sound counterintuitive, but sometimes you could have a hawkish catalyst from Federal Reserve, let's say, and you just get a kind of knee-jerk spike to the upside, right? It could be a number of things that simply just causes, you know, the market to move in the opposite direction temporarily, and then you get the opportunity to fade that. So keep an eye out for this, but certainly the follow-through trade would probably be the preferable one. So you see that really kind of hawkish catalyst coming out of the Fed, the dollar rallies, so this market breaks lower, then you get a correction of follow-through to the downside. And finally, Aussie dollar, very similar. In fact, the same setup here. Any pullback or consolidation during the week is going to be viewed as an opportunity to look for a breakout in the direction of the overall market, i.e. to the downside. And then any pullback, I'll be looking for a follow through intra-week down to the 0.6630. And again, you know, if for whatever reason you get this pulling back, maybe testing these highs, this would be the area you could consider to start to look to potentially fade that post FOMC on Wednesday. But as I said, just be very careful if you are fading interest rate decisions that there is not a major catalyst that came out of that event which you're trying to trade against. You know, you pretty much want it to be a non-event if you're going to attempt to fade an interest rate decision. Okay, so wrapping up the video with gold, silver, and Bitcoin. As you can see, I am really favoring bullish setups in these markets because the dollar is one of the best shorts in the scorecards. But this has to be in line with a bearish dollar post FOMC. If we get a bullish dollar in the catalyst from FOMC, that is a headwind to any long positions in these markets. Instead of trading these to the short side next week, I would much prefer to trade New Zealand dollar lower and Aussie dollar lower if we get a stronger dollar. So each of these three are based on a weak US dollar from FOMC, and if we don't get that, I'm not going to trade these at all. I'd rather just short Aussie dollar to the downside, New Zealand dollar to the downside next week. So any pullback in this market next week is viewed as the opportunity to look for bullish reversal into the 19950 area. And again, if we pull all the way back to the 1930 area, this is a second place next week. You could actually start to look for a bounce and a near-term buy opportunity in gold. Next is silver. What I'd like to see is continued correction in silver, and then maybe from FOMC we get a weaker dollar in line with the scorecards. This would be a great opportunity to look for a breakout and a move into the 2540. Or if we can pull all the way back down into the 2380, this would be a great area next week to look for a short-term trade to the upside in silver. And last but not least, we have Bitcoin. Bitcoin has been in a very, very tight range. I do, on balance, favor long positions. So any pullback in Bitcoin is viewed as the opportunity to look for a breakout into the 31,400 area, previous high over here. Or if we pull all the way back into the lower bound here, you can see the 28,000 area roughly would be a good place, a secondary opportunity essentially to look for buying opportunities in Bitcoin for a short-term bounce to the upside next week. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.